Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. As we head into the final week of September and into a fresh quarter, rapidly surging global inflation and the unstoppable commodity super cycle, they are beginning to emerge as the biggest and most exciting opportunities in the post-pandemic recovery. Now, with the pandemic easing, economies reopening, inflation across the globe has surged to levels not seen since the 1990s. Consumers are now paying 5.3% more for goods across the board than they were 1 year ago. Gasoline prices, they're up 52%. Groceries, they're up 14%. Used car prices, they're up 36%, whilst house prices, they've accelerated by 23% in the last year. This has been fueled by a record-breaking surge in essential home building components such as lumber, aluminium, copper, and steel. Just like the US, nearly every economy around the world right now, they're experiencing a rapid surge in inflation. Canada's annual inflation rate that hit 4.1% in August. That's the highest level in 18 years. Meanwhile, the UK's inflation hit 4% last month. That's the largest jump since 1997, whilst the Eurozone inflation, that hit a 10-year high of 3%. If you want to beat inflation, you can't just stockpile cash in a savings account. It won't earn interest fast enough to combat inflation. If you're wondering just how high inflation can get, you only have to look across the whole commodities complex. This month, a wide number of commodities, they blasted through their all-time highs. Aluminium prices have soared to 13-year highs. Nickel prices have hit 7-year highs, and uranium prices have surged to a decade high. The bullish momentum also spilled over into other commodities, with natural gas prices breaking out to 7-year highs. Sugar prices have now hit 4-year highs. Lithium prices have climbed to all-time highs. Uranium, natural gas, and lithium prices, they are up 219%, 240%, and 215% respectively. But the best performing commodity this year is crude oil. Oil prices, they're now within striking distance of $80 a barrel, currently up 293% from their 2020 lows. Many of the world's top investment banks, including Goldman Sachs, they predict oil prices will hit between $90 to $100 a barrel this winter as the new super cycle continues to gather pace. There are plenty of reasons why commodities are on the move, but the key driver is rapidly surging global inflation, tightening supply, logistical bottlenecks, and booming demand across many highly essential commodities as a result of the COVID-19 pandemic. As you know, volatility creates opportunity. Banks, hedge funds, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 3 months left to go. So if you have been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. Firstly, let's move over to the US dollar index. So the US dollar index last week broke out to 1 month highs. So at the Gold and Silver Club, we've maintained 6 positions on the US dollar. We took the advantage on that breakout that we saw on Wednesday after the FOMC statement, where the dollar spiked to bank over 600 points profit. So of course, for every 1 lot contract that you'll be trading, that's $6,000 of profit. For every 10 lot contract you'll be trading, that's $60,000 of profit. Now, we've talked you through the dollar strength that we've been expecting over the month of September, but particularly in the last week as well. At the start of the week, we had the public holidays in Asia. During thinner liquidity, we saw big sell-offs across the board at the start of the week. Everything from equities to cryptocurrencies, also commodities dipping at the beginning of the week, propelling that US dollar to 1 month highs, allowing us to bank into strength and capitalize on that risk-off environment, something that we've discussed with you previously in a lot of detail during Gold and Silver Asset of the Day and the week ahead commodity reports. Over September, especially once you move into the 3rd and 4th week, you're going to see a lot of end of quarter profit taking outflows. We had quad witching the previous week on Friday, and that saw a lot of capital drive into the dollar. So if you're aware of that, you can capitalize on that massively. And as we discussed with you last week as well, expect a trap on gold and silver heading into Wednesday's FOMC statement. Again, feel free to go back and watch last week's report, Gold Asset of the Day, where we talked you through this in detail, that a lot of traders would end up FOMOing after the FOMC statement, oblivious to the fact that typically after a central bank meeting, whether it's a European central bank or an FOMC statement, metals are faded. They get sold into and then they sell off over Wednesday and into Thursday's session. In fact, you can see here where gold, from the highs that it broke out to on the FOMC statement, which causes a lot of traders to FOMO in, they basically end up buying right at the high as they get their delayed confirmation. We've seen gold prices then drop down 500 points to the downside after that FOMC statement, just enough, by the way, to take out the weekly lows to make sure that traders get triggered out of their stop losses, and then you see the reversal, which is very common. So we've seen a stop hunt there on gold, liquidation event, back down towards the swing lows, and then support come in again on Friday. So if you know this ahead of time, that will help you massively. As I mentioned, the dollar spiked to the upside on Wednesday. We capitalized on that, banking over 600 points on our dollar long positions here, which has been a very simple way to capitalize on this recent risk-off environment where everything from cryptocurrencies to equity markets, they've all had a big sell-off at the start of the week, as I'm sure you are very aware of. So what does that mean now heading into next week? Well, let me show you a few opportunities that we're keeping on the radar going to next week. One of those I would definitely have a look at here is palladium. So palladium within the last week has found support just above 1,800 US dollars per ounce. You have to remember that palladium prices, they were trading at $3,000 back in May when they broke out to all-time highs. They have subsequently pulled back 40%, offering a massive opportunity once this market does bottom. I would keep a very close eye on this market and the cycles at this time of year for palladium. In the last week, we have also seen commercials. They've switched into a net long position on palladium, which has been the first time in over 5 years we've seen this event occur. And also hedge funds and money managers, they've significantly trimmed their net long position over the last couple of weeks, which is suggesting we are getting to an extreme point where soon we could capitulate to the upside, very similar to the move that we saw on platinum, where platinum prices slingshotted back up 5% last week here. They came back down towards $900 per ounce and then were able to rally over 1,000 points just within 2 sessions. So I would absolutely have that on the radar here going into next week and the end of September into October for palladium, which typically tends to perform very well in the final quarter of the year. It's also been similar for copper here as well. Over the last 3 sessions, copper has gained over 1.3%. It came back down, retested the swing lows here from August, and then very quickly was able to recover back above the 4.2 level. You can see here into the close, closing very near the weekly highs here. Also a strong reversal on this market. So again, palladium is very much on the radar as we go into next week. Then you only have to look at the energies complex to really see what's going on within the super cycle right now. We've got crude oil prices, which are currently up over 8% this month. We've also got natural gas prices, which are up over 17% in the month of September here. Now, natural gas cycles are typically very favorable as we move into the month of October. We've recently had a pullback over the last week, which is actually setting up for better opportunities here to capitalize on this bull run that natural gas is currently in. So this is also going to be a market very much to focus on as we go into the month of October. Then moving over to silver, this is also another market to have on the radar once we transition into a new quarter. Silver has played out down to expectations here. We've talked you through this over the month of September. Expect gold and silver prices to be under pressure. This is now the 9th year in a row we have seen this downward pressure on these metals over the month of September. It's the end of the quarter. We've had a lot of risk-off events over this month, which has propelled the dollar to 1-month highs, which we've capitalized on at the Gold and Silver Club. And now, as we've seen sell-offs on gold, on silver, this is going to provide some excellent opportunities once we move into the month of October. Then we'll be moving into a new quarter where fresh capital comes back into the markets. And typically, this is a great time of year to capitalize on many commodities and the cycles that we move into over the months of October, November, and December. As you know, bull markets, they don't move up in a straight line, they zigzag. This presents savvy traders with back-to-back trading opportunities. One of the biggest obstacles that holds many retail traders back from achieving their desired success, it's not having access to data and market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you'll end up wasting lots of money, effort, and have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis or gimmicky technical indicators will not work. We still have another 3 months left to go of this year. Time is the most valuable commodity that you have. Make sure that you don't waste it. This is where you want to be trading the same way as the hedge funds, money managers, banks, and institutions, utilizing statistics, data, market intelligence. Learn and understand the daily, the weekly, the monthly, the quarterly cycles in the market. Understand and learn the intermarket correlations, the ratios. Alongside that, the key drivers for each commodity, the major news items that will have the biggest impact. Alongside that, understand key areas of liquidity, the sentiment in the market, and of course understand how hedge funds, money managers, banks, and institutions are positioned. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, and access to our private Members Academy website, alongside support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.